Hey guys, what's up? Kunal here, Bulls on Wall Street. Guys, I wanted to talk to you about something I think is actually really important. A member in our Discord room had asked me this yesterday and asked me to make him a video on this because it's something we've been talking about, but it can get a little bit confusing, which is when do you scale in and out of trades and when do you just kind of do like a one shot, one kill? So, like for example, if you go on Twitter, right, and you see some of these like short sellers that post their like dash trader executions, right? It'll look like they had like 500 executions, and then they have like one cover, right, where they're like just averaging in, averaging in, averaging in, or scaling in, however you want to call it. And for my style of trading, that's not really conducive to proper RR calculations and other things. I don't like averaging into trades because it builds bad habits. It allows you to rationalize a bad entry. It allows you to rationalize mistiming something. So I do scale in and out of positions. But what I do is I do it when different trading patterns emerge and I carry a few lotto positions and then I essentially trail up my stop loss. So what I mean by that is like, for example, say you have something like this, NVDA, right? So, averaging in would be like, okay, like the stock dips and then you add some, it dips again, you add some, it dips again, and you add some, it dips again, right? And you're kind of hoping for a pop. And that's like averaging in. And that's, I don't believe, a good way to trade. It just allows you to get lucky in hot markets where, you get rescued out of positions. But most of the time, what's actually going to happen is, you're going to have market structures shift and then like a stock will just kind of keep going down and you'll be really out of the game like really, really quickly. So what I personally like to do is trade around a position, but it is setup dependent. So as I see a new trading pattern, I take a trade and then I scale out of it. Then as I see a new trading pattern, I take a trade, I scale out of it. And so I may have some core position, but I'm essentially only adding during new setup. So what the heck does that actually mean? And how do you do that, right? So if you think about like if you're going to scale in and out of a trade, you have to remember that there are three stages to the trading day. All right. So your open, which is your, let's say 9:30 to 10:30 a.m. Right. Then you have your midday. That's your 10:30 a.m. to 1 p.m. That's like usually about retracement. It's about consolidation. Things slow down. So the open is about thrust and volatility, about stocks trying to find their range and their equilibrium. The midday is about retracement, consolidation. Then end of day, you pick a side. And that's your kind of 1 p.m. to 4 p.m. Some people may even add power hour 3 to 4 is like a separate time, but I tend not to do that. For me, afternoon trading is afternoon. So usually how it goes, the open is hot, midday is not. Sometimes the end of days a go, more often it's a hoe, right? And so you really want to be kind of trading around these. So at the open, you have three distinct trading patterns that you can do. So you always have to judge this by trading patterns, and this is how you're going to be able to properly scale in and out of a trade. So at the open, in our Bulls on Wall Street 60-day trading bootcamp, we teach three patterns that you can do at the open, right? So one is a red to green. That means if a stock opens weak, and it's a long on the daily chart, goes red to green, that's a potential trigger. A secondary trigger can be an ORB. An ORB is a very simple pattern. It's a 3-candle pattern. You get a thrust up at the open. You get 1 candle, 2 candles, 3 candles, and then you can buy the break, right? And you can do it on the 3rd candle. And then the third one is a quick pullback buy, right? And this is just essentially your first pullback to either the 9 or 20 EMA. Sometimes it might be VWAP, but I prefer to do VWAP towards the middle of the day. So you have 3 patterns at the open, right? And then after the open, your midday, you're going to have VWAP patterns, flag patterns, intraday flag patterns, and 20 EMA patterns, right? So you're going to have like a whole subset of different patterns. So when you're thinking about scaling in and out of a trade, what you really want to be doing is thinking in a pattern specific manner, right? We always want to narrow trading down into setup specific things. So for example, I'll go through some trades that we did in the chat room and, and how I personally like to do this. So this NVDA is something that's been right on our watch list for quite some time. It's essentially a daily trader. And you had a breakout spot here at about 293 yesterday, which kind of coincides on multiple time frames for some different things. So I have an idea that, NVIDIA is going to go. And then on top of that, MU had some news out yesterday. And so I figured that, the whole tech sector in terms of semis is probably going to get a little bit of a push. And so I have this NVIDIA right on top of the list. So up at the bat, like you could see here, like NVIDIA closed at 289.59, give or take, right? The previous day. It dipped down just a hot second, maybe about $1.30 right at the open. So as soon as it goes red to green and breaks the previous day's high, that's like a primary trigger, right? That's a primary trigger for a red to green. So when you have a trade like this, for example, you can add this and then, right, you put a stop at the bottom of the candle, and now you're into this thing for a day trade. Now, you don't know if it's going to trend or not. And so you always want to be scaling out and taking profits along the way. So like in something like this, it's like, okay, you pop in at 289, you get up to, right, 281s or give or take. Well, I'm always going to lay off. Anytime I get kind of a $2, $3 candle like that, like I'm always selling some off. So like that's your primary trigger, right? A red to green. Now, we already just learned that at the open, we have multiple patterns, right? So we can also do an ORB. So an ORB is a 3-candle pattern. So like as the stock goes up and starts hanging out, 1 candle, 2 candle, 3 candles, right? And I get myself an ORB, like we're reloading into this thing and I'm adding a full size position. So I've got a half size left and now I'm adding a full size. And now it's just a matter of scaling out into these spikes. And so, and I'm trading live in Discord in front of everybody throughout the day. So, what we're starting to do is like, just scale out of these things. So like it's 8:45, 9:45 in the morning, 15 minutes a day, right? Sell some in 291.69, 292.40. And then you can start to see like later on, about 30 minutes later, right? I reload this whole batch onto it. And so I'm scaling out along the way, right? So into the first spike, I sell some, and the 292.40s, I sell some. And what I do is I always keep, right, a lotto position. Now, I kept the 1/4 position out of this batch, right? And I still have some of my original shares. And so now this is what we call, right, scaling in and out. This is not averaging into a trade, right? This is trading around patterns dependent on the time of day, and so that you can ride into a trender. So what you'll start to see is like as the stock, right, around 9:11, so that's Central Time, so 10:11 a.m., right, I relong at 291.50. So this is a specific setup. So as NVIDIA starts to break down from 293 back into the VWAP, right, and you can see you start to hold at the VWAP here, I add as I get a green candle to hold. So you don't blindly ever buy at the VWAP. I wait for a green candle to hold, then I'll put a stop at the bottom of the range. This also happens to be the area where the ORB was. So now I've got myself, right, 2 layers of support that I can trade around. So now what starts to happen is like as this thing starts to shred, my target is up here for this batch of shares, right? My target is up here because this is going to be the second test of resistance. So I want to be selling off some into, into that aspect of things. And so you'll see here, like around 15 minutes later, I sell some at 292.60. And then I've still got, right, some shares left. And so now what happens is at 9:55, I add the whole batch again, a full size position. So I'm selling off into this. And then as this pattern tightens up around 11 o'clock, right, 11 o'clock Eastern Time, 10 o'clock Central, you start to build out this level, right? You're testing it and you're testing it and you're testing it and you're building out that level. And see how your 9 EMA starts to get tight. So I preempted the 293 a little bit by about 20 cents so I can get closer to my 9 EMA. I only had 30 cents of risk on this trade, right? So I'm adding a full batch of shares at 292. So that's a full size along with everything I've added below. And I'm trailing my stop loss on all shares up into the 9 EMA. So like I'm adding on this candle right here as it breaks through, and my stop loss is right here. Man, I'm only risking 30, 40 cents. And you always want to give it a little bit of room. You know, I would do about a half candle's worth of ATR. So the 5-minute ATR on NVIDIA is 59 cents. So I do about a half candle, which means I give about 30 cents room under the 9 EMA to handle shakeouts and wicks and things of that nature. So now I'm back into this thing at the 292s. And once again, I'm just scaling out. I sell off a third, right? Then I sell off a few more in the 294s. I sell some more at the 295, sell some more, right? And so now this final batch into lunch is where I'm like really scaling out of all the trades. Why I'm scaling out of all the trades and not looking to add up here is that the ATR on NVIDIA, that means the average true range is $8, all right? So if you look from here, the start of the move is at 288. Once you start getting into 297, 298, that's a $10 move. The ATR on this is 8.5. So as you get into 297, you've basically covered the ATR. Anything over that is gravy, but it's also going to indicate once you go past a stock's ATR and there's really no news on it, you're probably going to have a sharp decline later into the afternoon if you use up the ATR too fast, too soon. So I want to be selling off into this because the ATR is used up. And so that's how you want to really be, you know, scaling in and out of these things. And, you know, I did something very similar in Tesla, which is, you know, if you see here, there's multiple setups that were going on. So, you know, this is something I scanned out in the pre-market for everybody. You know, we have like kind of a 169 break as like kind of a 3-day pattern. And so you can do the same thing. You have a 3-candle ORB here. So you have an initial lot. And then, right, you're going to sell off some into the spike. But then as you start to break through, right, you get another setup. And then later on, you get a flag pattern and so on and so forth. So remember the times of day. Look, if this thing came back into the VWAP or something, then I would reload and do afternoon setups and things of that nature. So remember the time of days. You want to sell off into those spikes, trail up the stop on all shares, and then as a stock starts to congeal and show a secondary pattern, what you can do is add, and then you want to trail up the stop losses on all of that, and you'll end up with really, I mean, that's when you're going to have yourself some good, you know, some really good trading. In this market, guys, as the market is starting to pick up some steam, you're going to see more and more all-day trenders. In 2022, if you were trading to the long side, you had to be very quick because the market was not giving us really more than like 30, 40 minutes of upside, right? Now that the market is getting into more of a grind it mode where you're just going up a little bit every day, what you'll start to see is, right, an infinite more amount of breakouts, and you'll see a lot more of this grinded. So you can see like how we're just kind of grinding here, right, and slowly going up. So these like kind of small green days are actually really good for breakouts, and they're really good for getting kind of all-day trenders, because what happens when the market's grinding up like that, you don't get those big nasty shakeouts and flushes and kind of those like 1% drops out of nowhere. Right now, because the volatility is so low, when you get these kind of drops in the middle of the day, they tend to be very relaxed. They follow the support and they end up getting dipped up. Like you can see today, like we filled the gap on the Qs and we just came into the red to green spot. It looked like it could get nasty for like 10 seconds, right? And then it just falls into support and then just rips back. And that's the kind of market that we're in right now. And it's kind of fun, right? After all this time, like we've been really kind of grinding our balls off. It's nice to have just like a little easy market. So guys, hopefully that helps. Let me know if you have any questions. I'll make some more videos on this kind of topic, but I think as the market heats up, it's going to be important to have really, really good trade management skills. You know, in 2022, it was all about really risk management, but really having really, really good entries, because if you didn't have good entries, you were getting murdered because there's so much volatility. Now that the volatility is a little bit less, it becomes more about the trade management and scaling in and out properly. So let me know if you have any questions. And as always, smash that like button. Take care, guys.